Welcome to IQD DINAR News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The global economy is an interconnected web, and currencies are a crucial part of the financial structure that holds countries together. The value of a currency is often a reflection of a nation's economic health, political stability, and natural resources, and these factors can fluctuate in ways that impact currency holders, investors, and the overall global market. One currency that has been at the center of many discussions and debates, particularly among speculative investors, is the Iraqi dinar. The dinar has long been a point of interest for those seeking to capitalize on a potential revaluation, RV. This interest stems from the idea that if the Iraqi dinar were to be revalued at a higher rate, those holding dinars would see a significant return on their investment. However, amid this excitement, there is also a great deal of misinformation and misunderstanding circulating in the investor community. It is critical to bring common sense and logic to these discussions, so that investors can make informed decisions based on facts, rather than speculative fantasies or rumors. One of the most persistent myths within the dinar investment community is the notion that in order to exchange their dinars for American dollars, USD, investors will need to travel to foreign countries such as Jordan, Egypt, or Syria. This idea can cause unnecessary anxiety and confusion, leading people to believe that their investment will require additional travel expenses or logistical complications. But here's where logic and rational thinking must prevail. There is absolutely no reason to believe that travel will be necessary to exchange Iraqi dinars for USD. The global financial system is structured in such a way that currency exchange is a routine process facilitated by banks, exchange centers, and financial institutions. Whether or not a revaluation occurs, the process of exchanging currency is no different from exchanging other foreign currencies. If, or when, the dinar is revalued, investors should be able to go to their local bank or authorized currency exchange service and complete the transaction without having to leave their country, let alone cross borders. The notion of traveling to Jordan, Egypt, or Syria to exchange dinar stems from a misunderstanding of how international banking and exchange systems work. These countries are not magically special locations where dinars will be worth more, nor are they the exclusive points where currency exchanges can happen. Banks and financial institutions around the world are linked through international networks that facilitate currency exchange daily, and the Iraqi dinar is no exception to this. Assuming a revaluation occurs, banks within the US would be just as capable of handling the exchange as banks in any other country. Next, let's address the misconception about the dinar's potential revaluation rate. There are whispers and rumors that the dinar will revalue at 10 cents, a rate that some may find discouraging. For those who believe in the long-term potential of the Iraqi dinar, this rate might seem too low, leading to feelings of disappointment or confusion. But here again, a dose of common sense and logic must prevail. Looking at historical data, the Iraqi dinar was once valued at approximately $3.22 to one dinar, and this was at a time when Iraq's primary resource was oil. Iraq's oil wealth and natural resources give the country the capacity to support a much higher exchange rate than 10 cents, and there is reason to believe that this potential still exists today. When considering the potential for revaluation, it's important to keep in mind that Iraq is a country rich in resources, particularly oil, which plays a significant role in its economic strength. Dr. Sinan al-Shaybabi, the former governor of the Central Bank of Iraq and a renowned economic expert, has publicly stated that Iraq could sustain an exchange rate of $16 to 1 dinar. This is an astonishing figure, and while it may seem overly optimistic, it underscores the fact that Iraq has the economic capacity to support a far higher exchange rate than 10 cents. However, as Dr. Shaybabi himself has suggested, it is important not to get greedy or overly speculative when considering these figures. A more reasonable rate, such as $4.80 to 1 dinar, is more realistic and attainable in the short to medium term. Investors should remember that revaluation is not a get-rich-quick scheme. While the possibility of a significant revaluation is real, it is important to approach the investment with patience and a clear understanding of the economic and political factors that will drive any potential change in the dinar's value. Iraq's journey toward economic recovery and stability has been long and difficult, and while the country is making strides, it is still facing challenges related to political instability, security issues, and infrastructure development. These factors must be taken into account when considering the timeline for any potential revaluation. However, despite these challenges, Iraq's vast natural resources, coupled with growing international interest in its economy, make it a strong candidate for future growth and revaluation. One of the most encouraging aspects of the dinar's potential revaluation is the fact that Iraq has been rebuilding its economy, both through the restoration of its oil infrastructure and diversification into other sectors. The country's leadership has recognized that in order to build a sustainable and prosperous economy, Iraq cannot rely solely on oil. Efforts to diversify the economy, attract foreign investment, and improve infrastructure are all steps in the right direction. As Iraq becomes more integrated into the global economy, the value of its currency could rise to reflect this progress. Moreover, currency revaluation is not something that happens overnight or at the whim of market forces alone. It is typically a deliberate policy decision made by a country's central bank in response to improving economic conditions, growing foreign reserves, and a need to strengthen the national currency in the global marketplace. The Central Bank of Iraq, under the guidance of economic experts like Dr. Shaybabi, is keenly aware of the potential benefits of revaluation, but they are also cautious about the timing and scale of such a move. While investors are understandably eager to see a significant change in the dinar's value, the central bank's approach is likely to be measured and strategic, ensuring that any revaluation is sustainable and beneficial to Iraq's overall economic health. That said, the idea of the Iraqi dinar returning to its pre-1990s value of $3.22 or even surpassing that figure is not out of the realm of possibility. Iraq was once a leading economy in the Middle East, and with its vast oil reserves, the potential for future growth is immense. Oil remains a key driver of Iraq's economy, and as global demand for energy continues to rise, Iraq stands to benefit from increased revenues. This, in turn, strengthens the country's ability to back its currency with tangible economic value. In addition, Iraq's growing international trade relationships and foreign investments are further signs that the country is moving in the right direction. For those who are invested in the Iraqi dinar, it is important to stay informed and grounded in reality. Speculation can sometimes lead to unrealistic expectations, and the disappointment that follows can cause investors to make rash decisions. The key to successful investing, especially in a currency like the Iraqi dinar, is patience, research, and a long-term perspective. It is also critical to remain skeptical of sources that promise outlandish revaluation rates or demand unnecessary actions, such as traveling to foreign countries to complete a currency exchange. Investors should also be cautious of scammers and unscrupulous individuals who prey on people's hopes and fears. In the world of currency trading and investment, there are always those who will attempt to manipulate emotions for their own gain. This is why it's so important to rely on reputable sources and expert opinions, like those of Dr. Shaibi, rather than falling for sensationalized claims that have no basis in reality. In conclusion, while there is no denying the excitement surrounding the potential revaluation of the Iraqi dinar, it is essential to approach the topic with a clear head and realistic expectations. There is no need to travel to distant countries to exchange your dinars, and the notion of a 10 cents revaluation is highly unlikely given Iraq's economic potential. The country's natural resources, particularly its oil wealth, provide a strong foundation for future growth, and while it is possible for the dinar to reach rates as high as $4.80 or even higher, it is important not to become overly speculative or greedy. Investors should stay tuned for further developments and continue to approach this investment with logic, patience, and a clear understanding of the economic forces at play. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.